I think one of the challenges with small cap portfolios for consumers is A, they don't necessarily know the names. B, you can also have names that trade at very, very low prices. I know you have a name in your history that when you first started owning it, was not exactly a high price name, but wound up being one, a company called Enphase. Can you tell us a little bit about that?
Really, the first thing to say is we're never that concerned about what the price of the stock is, whether it's very low or very high. I mean, really, we're looking at what the total value of the company is, because that's the most important thing. How many pieces it's chopped up to in terms of how many shares there are, that's really less relevant to us, and it can be changed via share splits or share consolidation. So I think that's the first thing to note. And we run across it a lot because we do own some stocks that have very low prices. But with regards to Enphase, yeah, I think it was around $1 a share when we first started looking at it. It was actually a name that I had come across earlier in my career when they did their IPO in 2012. I was covering energy at the time. Fast forward to, I guess this would have been maybe around 2017. Solar power, the whole industry had really fallen out of grace with the crash in oil prices in 2014 and 2015. There was with low energy prices elsewhere, there's not much of an incentive to pursue solar. And so you did see a lot of companies in distress. A lot of them were going bankrupt. And this company also could be lumped into that category. I think it was the market cap was only around 100 million at the time, and there were worries that they wouldn't survive. And the company itself made a piece of electronic equipment for solar panels that would convert the electricity that was generated by the panel from DC into AC into a more usable form to feed into the grid. And they had a great product. The adoption was great. It was very highly regarded in the industry. There were a lot of customers that were using it and very happy with it. The problem was that they couldn't really make it. They were losing money and in their manufacturing process. And so, the company was really struggling. People thought that they only really had a few quarters or a year to live. And, it really came on our radar following our process. We saw a very large purchase by a guy named TJ Rogers, who was a storied executive in the tech industry, founded Cypress Semiconductor, was extremely successful. And he came on board, wrote a big check. I think he came on the board and started bringing in new employees. He put in a new CEO, and really it opened our eyes, not just the size of the check that he cut and the fact that he got involved with the company, but the fact that here you have an executive with a multi-decade history in the tech industry coming into a very tiny company that looks in distress. It's really notable when you see those types of executives take a step down into something that looks like it's a much smaller job for them. But so, we followed it for a while and started modeling it out and, listened to the new CEO's plan to really turn the company around and kind of bring what I would call a much larger organization's style of management and manufacturing prowess to this company that, really was kind of still founder led. I mean, they weren't, it was still being run kind of like a startup. I think that these other executives came in and saw the fact that the product was highly regarded, and if they could figure out a way to manufacture it there was really a lot of upside ahead because it was so widely adopted. And so, we saw that if the things that they were putting in place, the manufacturing policies, if they could get to their goals, the company was extremely undervalued. And so we did a write-up of it, I want to say kind of mid to late 2017 when the stock was $1 a share. Just saying how it could be undervalued and how there was pretty significant upside. And over the success, the following 3-4 years, I mean the stock has done extremely well. They were able to get their costs under control, margins expanded, revenues grew, earnings grew, and then you got a multiple expansion on top of that. And I think the stock is north of 200 today. I haven't looked in a while, but it was an extremely successful investment. One that admittedly, it overshot even our estimates of success. And so, we were, it was $1. We were trimming it at 20, at 50. I mean, it's like, wow, these guys are really doing much more than we expected. And it started to become, more of a growth stock than a value stock. And I think if you go back and read our original write-up, we actually talked about that, or we had this in our discussions of how, we're buying this thing when it's distressed, and they're not really getting any credit for their potential upside. But eventually we're going to hand it off to a different type of investor who, is willing to pay a high multiple and willing to bake in some of the growth. I think that really, kind of encapsulates our view of value investing. I mean, we're really looking for these things that appear to be undervalued. We're not in the business of trying to buy high and sell higher. I think that there's a new type of investor that's in that stock today. And, I think we still own a few shares of it for some of our clients in the small cap fund. And, it's an interesting one to watch, but it just goes to show you that, you find some of these signals that are less followed, you do the work that is required, and a lot of times it pays off in a big way. And we think we have a number of other investments that have a similar path ahead of them.
Joe, did you want to add anything to that?
I do, yeah. Sure. When TJ Rogers, who's one of the most well-known executives in Silicon Valley, who ran Cypress Semiconductor for years, got involved with Enphase, that really is what drew us to the investment and gave us conviction in the name. Coincidentally, we have another name in the portfolio today, Enovix, which TJ is also behind as chairman of the board and largest shareholder. He owns a $300 million stake in this company. And basically it's in the battery business, both for consumer wearables all the way to EVs. They replace graphite with silicone in these batteries, and they're getting a much longer life. And they have up to a 5-year head start on the rest of the industry in this battery technology. It can be absolutely huge. And so, we're not blindly following Mr. Rogers into the investment, but his track record is pretty darn good. And so we're very excited about the name.